Most traders use supply and demand zones the wrong way. They buy every demand zone and sell every supply zone without waiting for confirmation. In this chart, I will show you how I combine liquidity, premium, and discount, market structure shift, and fair value gaps to find both a sell setup and a buy setup from the same chart. The first thing I noticed on this chart was the sell-side liquidity resting below these lows. Many traders place their stop losses under obvious lows, which creates a pool of liquidity. Institutions are aware of this liquidity and often use it as a target. Before focusing on any supply or demand zone, I always identify where liquidity is located, because liquidity often gives clues about where price may want to move next. After identifying the liquidity, I marked this supply zone. A supply zone is an area where strong selling pressure previously entered the market and pushed price lower. This tells me that institutions may still have unfilled orders in this region. Instead of selling immediately, I simply mark the zone and wait for price to return. My goal is to see how price behaves when it reaches this area before looking for any sell opportunity. Next, I marked this demand zone. A demand zone is an area where strong buying pressure previously entered the market and caused a significant move higher. This tells me that buyers were active in this region and may become active again if price returns. Just like the supply zone, I do not buy immediately from the demand zone. I simply mark it as an important area and wait for confirmation before considering any trade. Before looking for any trade, I also marked the premium and discount areas. Premium represents the higher half of the price range, while discount represents the lower half. In simple terms, I prefer looking for buying opportunities in the discount area and selling opportunities in the premium area. As you can see, the demand zone is located within the discount area, which gives additional confidence for potential buy setups. Likewise, the supply zone is positioned in the premium area, making it a logical location to look for potential sell setups. This helps me align my trades with favorable pricing rather than entering randomly. Now, before price reached the supply zone, I identified this inducement. This area is important because it contains liquidity that can attract price higher. Many traders see this structure and expect a continuation to the upside, placing their buy positions or stop losses around these highs. As a result, liquidity builds up in this area. Rather than selling too early, I wanted to see price move into this inducement and continue toward the supply zone, where I could then wait for proper confirmation. As price moved higher, it finally reached the supply zone. At this point, I was not interested in selling immediately because a supply zone alone is not enough confirmation for me. Instead, I wanted to see evidence that sellers were actually stepping into the market. So rather than rushing into a trade, I remained patient and waited for a clear confirmation signal that could validate a potential sell setup from this area. Once price entered the supply zone, I waited for confirmation instead of entering blindly. Shortly after, price created a market structure shift, which was my first indication that buyers were losing control and sellers were beginning to take over. This change in structure provided the confirmation I was looking for. With the market structure shift in place, I entered a sell position and used the demand zone below as my target, since it was the next significant area where price could potentially react. After receiving the market structure shift confirmation, I entered the sell trade and price started moving lower toward the demand zone, exactly as anticipated. One common mistake many traders make is selling every supply zone without confirmation. They see price touch a supply zone and immediately enter a sell position. However, as you can see in this example, I waited for a market structure shift before entering the trade. That confirmation helped validate the setup and provided additional confidence before targeting the demand zone below. As price approached the demand zone, I also identified this inducement. This area is important because it contains liquidity that can attract price lower before a potential reaction occurs. Many traders become bearish during this move and expect price to continue falling. However, Inducement often serves as a liquidity point before price reaches a significant area. This is one of the reasons I remained focused on the demand zone and waited to see how price would react once it arrived there. Once price reached the demand zone, I noticed that buyers were defending this area effectively. However, just like the supply zone, I was not interested in entering a trade immediately. A demand zone alone is not enough confirmation for me. Instead, I wanted to see clear evidence that buyers were taking control of the market. So I remained patient and waited for a confirmation signal before considering any buy opportunity from this zone. After observing the reaction from the demand zone, I waited for confirmation and eventually saw a fair value gap form. For me, this fair value gap was an important sign that buyers were beginning to step back into the market. Instead of buying simply because price touched the demand zone, I waited for this additional confirmation. The fair value gap provided more confidence in the setup and suggested that price had the potential to move higher from this area. Once the fair value gap confirmation was established, I entered the buy trade and used the supply zone as my target. The reason for targeting the supply zone is that it was the next significant area where price could potentially react. Rather than chasing the market, I waited for confirmation first and then executed the trade. As a result, price moved higher and delivered cleanly toward the supply zone. Before ending the video, let me share two common mistakes traders make with supply and demand zones. The first mistake is buying every demand zone without waiting for confirmation. The second mistake is ignoring liquidity, premium, and discount areas before entering a trade. In this setup, I did not rely on the zones alone. I combined liquidity, premium, and discount, market structure shift, and fair value gap confirmation to build a complete trading plan. This approach helps filter weaker setups and improves overall decision-making. I hope this breakdown helped you understand how I use supply and demand zones with liquidity, premium and discount, market structure shifts, and fair value gaps. Remember, patience and confirmation are often more important than the zone itself. If you found value in this analysis, make sure to like the video, subscribe to the channel, and I will see you in the next one.